Alright guys, so I hope you're doing fine as always. Today I'm making another video. This video will be a little bit different than the videos that I usually make. In this video I would like to go over some of the possible mistakes in brackets or traps you can run into in the bull market. This is especially important if it's your first bull market, and I would say don't get stuck with the bags. There always have to be people that buy at the top and that have to ride the whole bear market in a loss or sell in a loss. So without further ado, let's jump straight into the video. Alright guys, so I would like to split up this video into two parts. First we will go over some of the mistakes that you can be doing on the future markets or perpetual markets, and then we'll have a look at some of the possible mistakes you can run into or traps you can run into on the spot market. So first of all, what are some of the mistakes you can do in the future markets as well as in the spot markets, to be fair, is being too greedy. You enter your trading without a fixed TP target or a stop loss. So let's say you enter a trade somewhere here. This is purely hypothetical. You enter the trade here, you have your stop loss somewhere there, and your initial TP is at 130k in this specific scenario. So price is going pretty quickly. It's nearing your 130k and you're starting to think, what if? What if prices are going higher? So you remove your TP level and you just ride it through. So you see prices breaking through the 130k, say to 133, you're feeling amazing, you think you're making more profit, but all of a sudden price dumps. And I can assure you these dumps happen really quickly and very aggressively. You won't have time to react. So what will you do in this scenario? You probably think it will retrace or go up anyway, or again. So you just hold your position, you see price is not going down, you don't want to accept that you made a mistake. That's a big one for mainly beginning traders. They don't want to accept that they're losing or making a loss. So they keep the position in the hopes that we go up again. This is probably the worst thing you can do in trading. It's hoping for something. We don't hope in trading. We base it off the technicals, the fundamentals, the bids and the asks, but we cannot hope. So you're holding your position, you're seeing red. You might even start adding on to your position over here to DCA your entry lower, but prices are still going down. We're starting to move into the bear market. So you won't see these highs anymore. You're starting to add. You're probably even, or you might even increase your leverage to unlock more margin, to increase your trading, and eventually you blow your account as price is not reversing anymore. It keeps on dropping aggressively. They're going on a liquidation run, so yeah, that's one possible mistake you can be doing. This is also for the bear market. In a short position, never add to your trades unless you decided to and have worked out a plan to do so before entering the trade. And if you're building some type of position, always use low leverage. That's my advice, of course, but stick to your plan, always stick to your plan, stick to your TPs, stick to your stop loss. Losing is not a bad thing. Just because you lose a trade doesn't mean it was a bad trade. You can have the cleanest TA, the best possible setup, but markets do what they want. So losing is not a bad thing. Keep that in mind, please. Also, don't be greedy. Stick to your TP. If you have taken your profits at 130k and you see price is shooting through, so be it. We did get profit, we took more money out of the market than we put in, so we made our cut. We gotta be happy with it. Whatever happens after, don't care about it. Hindsight can be one of the worst things in trading, and what if or I should have are two things that you should remove out of your vocabulary in this trading space. So always stick to your plan, because most of the times when you're adding to your trade and you're DCAing, price will eventually, let's say right here, price will eventually start reversing and you might get out of the trade to break even. This will happen, let's say 80% of the time, 90% of the times, and you're building bad habits. Very, very bad habits. Because you're thinking all I have to do is add on to my trade in order to win, till this one catastrophic trade comes that's not reversing, you're overexposed to the market, and you're liquidating your whole account. Don't make this mistake. Yes, there are people that trade with only just 1% of their portfolio, and their liquidation price for long positions is more than likely zero, so they can't, in brackets, get liquidated. That's also a strategy on its own. You need at least a big account to do something like that if you want to make some type of profits. With small accounts, it's really hard to do so. Also, you cannot overexpose yourself to the market. So if you open one trade with 1% of your account, that's fine. But once you're on 10 trades or 15 trades open, you're already risking 15% of your account. So you will start seeing these liquidation prices appearing. And especially if you start DCAing on that as well, you are overexposing yourself to the market and you're bound to blow your account eventually. I personally prefer to stick to a fixed USDT number if I lose, but that's up to you and personal preference. So just don't be that guy that's too greedy in the hopes that it's going more in your favor and that you can get more out of the market. Take a dollar if you see one, I would say. So that's one of the biggest mistakes you can make in perpetual and future trading. This goes for crypto, forex, stocks, commodities, whatever you trade. Always stick to your predefined plan. Don't just free run it, because it will end up badly. I can assure you that. Your first 10 trades may be profitable and you think I'm telling a lie here or I'm just nagging, but that one trade will come, trust me, where it's not reversing and you're done. Your account is gone. Don't make this mistake. That's probably the biggest mistake you can make in futures. There's also mistakes that you jump in too early in trades or you missed an entry. Let's say you want to enter here. What is this? 60 or 76k. Prices are going down. Miss it by a hair. Go up. You think you missed it, so you jump in late in a market order, and price eventually does something like this. So now here you had a 3R, but when you jumped in earlier, you only had a 1.4R trade. So you are risking one of your risk factors to only gain 1.4 times that risk factor compared to the 3R you should have had here if you just waited and be patient. So patience is key in trading. If you missed an entry, so be it. Markets are not going anywhere. There will always be different opportunities. Don't jump in early out of FOMO, fear of missing out. Or don't just jump in a trade because someone on Twitter or Discord or YouTube told you to go into a trade. Always stick to your own plan. I'm strongly against signal trading. I know a lot of people like signals, it's easy, but it's just copying and trusting someone else with your money. You can go to the streets to someone, tell them, hey, what should I buy? And you buy it. It's the exact same thing. You're trusting a stranger on the internet with your hard earned money. Always stick to your own guns, stick to your own power, and do your own analysis. Trust your own guts, your own analysis, and don't just buy something because someone told you so. That are probably the two biggest things for future trading. So don't be greedy, stick to your plan, don't remove your stop losses, don't add to your trades without a plan, don't blow up your account. And then secondly, be patient. If you missed an entry, so be it. Don't just jump in because you think you missed it out of FOMO. You will ruin your risk management, and at the end of the day, it will ruin your profitability and you will turn out to be worse. You're creating bad habits. Don't do it. So, now for spot trading. I know we're in the bull market right now, and a lot of people are expecting a boom in altcoins. I also think we will see some stronger move up on the altcoins the coming weeks, months. So I don't think we have had the bull run for the altcoins yet on the day that I'm making this video. So it's the 18th of January. So don't be that guy that buys at the top. Don't FOMO in your trades, similar to the perpetual ones. As we're pumping up, don't just jump in out of fear that you're missing the move. We buy on the red days, we sell on the green days. Let me open an example chart, let's say near, for example. So I'm on the weekly just to show the highs and the lows. So where do people lose the most money on spot? Is it in a bear market or in a bull market? Where do people get absolutely wrecked? Most people will say in the bear market, but that's far from the truth. In the bear market, you can buy at the lows. So all that can happen is that you buy at a low level and prices are dropping more. So be it. You just gotta hold, you just gotta be patient. What can happen in the bull market? You can buy the absolute tops of the chart without knowing it's the top. So we only know it's been the top after the move has happened. It's the UMA, the umbrella chart. So who are the people that lose money here? Or who are the people that got wrecked the most? Are it the people that bought here or were holding their bag here? Or were it, for example, the people that were buying here? So yes, the people that bought here were in the red for a long time, but in the next cycle or the next hype run, they had the opportunity to sell. The people that were holding their bags or buying even more in the peak of the bull market or in the hype of the bull market and didn't sell, they got stuck all the way up here. And if we take a look to the right, prices will have to rise here, let's see, nearly 300% just for them to break even. So who got more wrecked here? The people that bought or hold their bags in the bull market or the people that bought in the bear market? So you can absolutely get totally wrecked in a bull market if you hold the bag. So similar to the perpetual one, greed here is the thing that kills your portfolio. So let's assume you bought somewhere here. Prices are going up. They're very hyped. Are going up very aggressively. And you're saying, or you originally wanted to sell here at 10 bucks, for example, but you see it shooting through. So you're saying, I can hold it longer. I will sell it higher. I will make more profit. As you can see here, the reverse was very sharply. Similar to the perpetual ones, people don't like to lose or miss out, so they keep on holding on to it in the expectation that it will go back up, but we do not. We go all the way down from here. They will not sell in a loss, so they will hold their position or they will hold them for the rest of the cycles in the hope that we will see a stronger move up again in the next bull run. But even if we do make a new high here, say we jump all the way back up, you also have to take into account the opportunity cost. So let's say we jump or we take a higher out here, the opportunity cost. So you did have to hold this position for 1,135 days, and that's a big if. So that money was locked away for 3 to 4 years at minimum, or even 5 years. So that's also a huge opportunity cost. You couldn't use that money to buy in the very bear market. You couldn't load up your bags here because your money was trapped in there. So I hope that's somewhat clear. Don't be greedy. Take your profits. Always take profits. Always pay yourself. We're in this game to make some extra money. We're not here to just hold and hold and hold in the hope that it will explode more. Of course, you can put some crypto on a ledger and lock it away for 10 to 20 years. That's a whole different kind of trading strategy. But if you're in it to make money quickly, or at least on a decent pace and not as a long-term investment, then sell. For example, on XRP, we can have a look on XRP. I personally sold a bunch of my XRP on $3. I also sold partial of my swing long trade on $3. Do I think $3 will be the top for XRP? Absolutely not. I think $4, $5, maybe even $6 are doable for XRP. But just in case we don't, I have taken profits here, so even if we go down, I still made some money. If we go up, which I expect we will still do, I could have made more money, but I did protect myself for the bearish case in case we don't go up. So don't be greedy, take profits on predefined levels. And if it goes up, so be it. If it goes down, you protected yourself, you took $1 when you saw $1, you paid yourself for your work, so you rewarded yourself for the trade you took and the money you invested. You gotta ask yourself, is it worth risking it all just to make a few extra bucks or maybe thousands of extra dollars? But I would increase the risk, or I would have the risk, and the longer I hold, the more risk I'm taking, that prices will drop very quickly and I will get stuck in my position. That's something you have to ask yourself. So I recommend take profits on predefined levels for XRP, for example. I might take some profits on 3.5. I might take some more profits around 4. I might take some profits around 5, and so on. So I'm paying myself for my trades, and then if it drops, I don't care if I have to sell 10% below my entry level. Okay, my entry level is lower, but even if it drops below my entry level, I don't care if I have to pay or sell 10% in a loss, or if I have to hold this 10% because I know I have made some money already. I have taken out the money, I have invested in it already. So I'm pretty much just holding free crypto. So I do have the money that I took off the chart ready in case we see another big drop and in case you expect some type of bounce. So the money you made here, you can spend again on a big correction and make some more money of it. So just understand that greed totally kills your trading. It's the worst characteristic that you can have in trading. It's greed and FOMO. I hope that was somewhat clear. These are the things for both the futures and the spot markets that I would really try and prevent. It's something I'm really hammering in this video. I hope none of you make these mistakes I just mentioned, because they are very costly. I hope that was clear. I hope the message was clear. I hope you will stick to your rules, to your plans, pay yourselves, take a dollar when you see one, and don't be that guy that gets stuck in a position. If there's one thing you have to take away from this video, it's don't be that guy. So as always, if there are any more questions about anything said in this video or any other topic, feel free to leave them in the comment section or on the Discord server, and I'll catch you guys in the next one. Take care, see ya, bye bye, and don't be that guy. Bye bye.